In an annual ranking of the top global brands, Tim Hortons has come out on top in Canada, despite the fact that the restaurant operator was recently found by privacy watchdogs to have violated the privacy of its customers through its app. It seems that when it comes to how we feel about brands, we care much more about the quality of the product and the price it's sold at than we do about the behavior of head office. Joanna Piacenza is head of industry intelligence for Morning Consult. Great to have you with us.
Great to be here.
So this was the first thing that came to mind for me, Joanna, was, they just had this bad publicity about, tracking people through the app. And yet it turns out if you sell a decent cup of coffee at a decent price, you're going to win over customers.
Yes, you're right. Good value and high quality products, those are the two biggest builders in trust, what we found in our Most Trusted Brands series. I do want to note that the data that we collected, that was prior to this data privacy scandal. That said, we're keeping our eye on the metrics in our brand intelligence platform, which tracks daily attitudes. So we're going to report if and when we see that net trust moving at all. We haven't yet.
Yeah, and I definitely think it's important to note that we haven't captured it. And yet, when people did say what they cared about, the company's behavior, its ethics, really do rank way below. Is the product good? Can I rely on it? Is the price good? We do see across the whole space, you do this survey for the Globe, the top brands do tend to be consumer products. They tend to be kind of household names that we use regularly, that we know well. How important is it for those kinds of products that they build up this sort of sweet spot of it's decent and the price is right?
Yeah, trust is not something that's going to be built overnight. It takes a lot of time. It takes a lot of mental load for a consumer to build trust with a company. That's why when you look at these rankings, they're household names. They're not necessarily the brands that are making headlines, and that's good. Sometimes no press is good press. So these brands are constantly there with prices, they're constantly there with value, and it's just that consistency over time and kind of word of mouth between family and friends that have gotten them on these rankings.
Yeah, Band-Aid, the #1 U.S. brand, is not one that we talk about very often, but as you say, quietly in the background, we tend to use it. When we talk about that trust and what could shake it, we'll watch and see whether this changes for Tim Hortons. They've had bad press in the most recent few years, that before this data was collected around, their franchisees, et cetera. It hasn't been great for them in Canada, so maybe it won't affect them. But I'd be curious to know how quickly you think a company can win back trust. If they lose it, how hard is it? What do they need to do?
I would say 5, 10, 15 years ago, if a company had a major data privacy scandal, it would have a much bigger impact on consumer attitudes, on trust, on purchasing consideration. Data breaches are so common now that they almost fly beneath the radar for a lot of consumers. So it's very easy to say that Tim Hortons, we might not even see that trust ticking down. If this happened a decade ago, I would be surprised if I hadn't seen any movement. Now, the things that do impact trust, what we're finding is a bad customer service experience, which I think resonates with a lot of people, and deteriorating quality. So if that Tim Hortons quality goes down, then we might see trust impacted.
So interesting. We'll watch that customer service data because, of course, we've seen some slipping post-pandemic. Joanna, great to have you with us. Appreciate it.
Of course.
Joanna Piacenza is head of industry intelligence at Morning Consult. Time for the takeaway and risks people take. Those who are invested in the world of cryptocurrencies have not had an easy ride lately. To say the least, volatility has been the norm, and massive losses across the whole crypto world has many wondering if the bottom will fall out for crypto. But for investors in this space, it can be said, at least, you're in good company. One of those who may be burned by crypto is one of Canada's biggest pension funds, the Caisse de dépôt in Quebec. It made an investment in crypto lender Celsius that said this week it was pausing all withdrawals amid volatility and concerns for its own stability. In old school terms, it wants to avoid a run on the bank. That never inspires confidence in depositors or investors. That a big and stable pension fund is tied up in something that now looks very risky has raised a few eyebrows. Why would a pension fund put money at risk in this way when it has an obligation to protect its investments to pay them out safely to pensioners? The answer is relevant to all Canadians, not just the 6 million Quebecers affected here. The Canada Pension Plan makes similarly risky investments these days, and for similar reasons. The first reason is sheer size. The KES has $420 billion in assets, so an investment loss of even $100 million isn't that meaningful to the overall performance of the fund. And because of their size, both the KES and the CPPIB need larger and larger investments. The second reason is the math on returns. With interest rates low for very long, pension funds that might once have matched their liabilities with super safe investments, say government bonds, can't afford to do that. So they get a bit riskier. Is it the right move? Well, the only real answer we have is for now. My takeaway? Pension funds are big and complex investment machines, but let's not forget, that's our money. How they're run matters to all of us. And as for whether taking risks will work in our favor, let's just say it works until it doesn't. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.